All right, folks, Dave here with Is the Bottom In? And today we're tackling a company that's been on a wild ride, Warner Bros. Discovery, ticker WBD. This stock has seen some serious swings, leaving a lot of you wondering if the worst is finally behind us. Let's dive in. So, why has WBD been struggling? Well, it's a classic tale in the modern media world. After the big merger of Warner Media and Discovery, there's been a mountain of debt to tackle, intense competition in the streaming wars driving up content costs, and the challenge of integrating two massive companies while finding those all-important synergies. It's a tough environment out there, and WBD has certainly felt the squeeze. For those not super familiar, Warner Bros. Discovery is a global media and entertainment powerhouse. Think film studios, TV networks, and direct-to-consumer streaming. They're behind iconic brands like HBO, Max, DC, Harry Potter, Discovery Channel, CNN, HGTV, and TNT Sports. From blockbuster movies to binge-worthy series and live sports, they've got their fingers in a lot of pies, aiming to be a premier content provider for the world. Now, let's get to the nitty-gritty, our scenario analysis. Our base case, which we're giving a 50% probability, assumes WBD keeps executing on its plan. They leverage their incredible content library, think HBO, Max, DC, Harry Potter, for steady subscriber and revenue growth. They're making solid progress on integrating everything and chipping away at that debt, even with the tough competition out there. We're looking at a fair value here of about $24.63 per share. This is based on their strong projected EPS growth of over 64% in the next 5 years, giving them a 50x PE multiple that reflects that growth, but also a healthy dose of market caution. Next, the bull case, where WBD really hits it out of the park. We're giving this a 30% probability. Here, they absolutely crush it. Max and Discovery Plus subscriber growth goes through the roof. They find unexpected synergies from the merger, and even their film and gaming divisions are firing on all cylinders. Debt reduction moves faster than anyone expects, and the market takes notice, giving the stock a higher valuation multiple because they've proven they can execute. Plus, that recent bounce we saw on the charts from major support, in this scenario, that's a sign of a sustainable turnaround. If all that happens, we could be looking at a fair value closer to $29.56 per share. This implies a higher PE multiple of 60x, reflecting robust profitability and a market re-rating, especially given its current PEG ratio suggests it could be undervalued for its growth. And then we have to consider the bear case with a 20% probability. This is where things get ugly. Intense competition in streaming eats into profits, subscriber churn increases, and advertising revenues take a hit. The merger integration hits major snags, delaying those promised synergies, and that high debt load becomes an even bigger problem. Basically, that strong EPS growth we're projecting just doesn't materialize. If that happens, the market assigns a much lower multiple, focusing on current earnings power with a pessimistic outlook. In this scenario, the stock could tumble back down to around $7.50 per share. That's based on a more conservative 25x PE multiple applied to its current TTM EPS, reflecting increased risk and limited growth, especially with its high beta of 1.59. Now, for you chart watchers out there, the technicals on WBD have been fascinating. We recently saw a significant bounce off that crucial major support level at around 690. For many, a classic double bottom or bounce-off support signal, suggesting the market might be signaling a potential turning point. However, while the chart looks like it's trying to put in a bottom, remember, strong fundamental performance is going to be absolutely key to sustaining any uptrend here. So, is the bottom in for WBD? Based on our weighted scenario analysis, 50% base, 30% bull, 20% bear, the odds definitely lean towards significant upside from current levels. That bounce off 690 looks promising from a technical perspective, but the real bottom will be confirmed by strong execution. Our analysis suggests a strong probability that the bottom is indeed in, or at least very close, provided the company continues to hit its operational targets and manage its debt. For those considering WBD, our scenario analysis suggests fair values ranging from the high single digits in a bear case to nearly $30 in a bull case. Considering the technical support around 690 and our base case fair value of 2463, accumulating shares around current levels could offer an attractive risk-reward profile if you believe in the company's turnaround story. All right, team, that's our deep dive into Warner Bros. Discovery. What do you think? Is the bottom in for WBD? Let me know in the comments below. Don't forget to smash that like button, subscribe if you haven't already, and hit the notification bell so you don't miss our next episode. And remember, folks, this is for informational and entertainment purposes only. I'm not a financial advisor, and this is not financial advice. Always do your own thorough research, consult with a professional, and understand the significant risks involved before making any investment decisions. Investing in stocks, especially volatile ones like WBD, carries a substantial risk of loss.